Hey, what's up everyone? Hope you guys are all doing great out there. So, wanted to show you a strategy that I use on a weekly basis for some consistent weekly profits and income. So, what I have here is a put. I have a $35 strike price TNA put that I'm selling. So, I'll show you guys how I use a strategy to bring in some consistent income in a safe way that I like doing, that I think is one of the safest strategies in the stock market and especially in options trading. So I'll go through step by step. Before I do, I just want to ask you guys to go ahead and give this video a like and subscribe to the channel. Also, guys, just want to let you know I'm not an investment or financial advisor, and these videos are for entertainment purposes only. Alright, so let's get started. Like I said, I have TNA open. So before we actually get into the trade, and I'll show you guys another stock as well that I have that I'm currently selling a put for once I get done with this. But with TNA, I don't really mind owning 100 shares. Why 100 shares? Because let's say the strike price is 35 and expiration is 10.6 or 11.6. Let's say at 11.6 the TNA drops below $35. So what happens then is I would have to purchase 100 shares of TNA at $35. So that's why you see the $3,500 cash collateral right there. So that's what that means. And the maximum profit I can make is right down here, $122, right? So as you can see, I'm currently up 44%, $54, and I have 68 more dollars of potential gains, right? So that's what I'm looking at. My strategy with this, I probably would close it up, maybe on a Friday just to avoid like a potential sell-off on like a late Friday. So maybe if I'm at like 85 or 90%, I'll go ahead and close it out, and I'll show you guys how to do that as well. So first, how to enter into selling a put, right? So first, you want to click on trade options. You got the option chart right here. You want to make sure you have this to sell and you have put selected. Then you want to go ahead and choose the expiration date. As I told you guys, I have one for November 6th, so I'll just pick one for next week, next Friday. All right, so basically what I'm thinking right here is by next Friday, I don't think the stock is going to drop below a specific price, right? So right now it's at $36.93, almost $37, and TNA is, it doesn't really drop a lot unless there's a huge sell-off, right? So that's the experience that I've had with this stock, and I've been doing this for the past few months as far as selling puts and even selling calls. But selling puts, I've been doing it pretty consistently. So let's just say, just to avoid a sell-off, I want to be on a safer side. I go all the way down and go ahead and select 34.5, right? 34.5. So this basically means that if TNA drops below 34.5 on November 13th, I would have to purchase 100 shares at 34.5, right? So, and then the other scenario is that if it's above 34.5, that's a simple scenario. Basically, I just collect my money, the premium right here, times 100. So in this case, it'll be $149, and I go ahead and move on, and that's it. So that's the simplest thing. You want to hope that it finishes above your strike price. So let me tell you guys something I do when I do place my order. Alright, so after you hit continue, you want to put one in the contract. So right here is what I do a little differently. So as you can see, the limit price gap is 1.34 and 1.64, and it's recommending me to enter the trade at 1.49. So I usually just write a little higher than what it's recommending. So I'll go ahead and put 1.55, just because I'll wait a few extra minutes and just get a few extra dollars, because it does fluctuate up and down. All right, so once you enter the limit price, you want to go ahead and click on review order. So as you see, that's the collateral that's required, 34.50, right? So, um, and then you go ahead and hit submit and just wait for it to get filled. So that's how you enter into selling a put, right? So basically, two scenarios. I'll just review it one more time. Two scenarios. It's either going to finish above 34.50 on the 13th or below. If it finishes above, that's sweet. You go ahead and collect your, in this case 1.55 or 1.49, whatever you put, and then go ahead and move on. Or if it finishes below 34.50, then you are assigned 100 shares, and then usually that's happened to me twice. So, and in both cases, the stock shot up like a week later. So, and I sold it for a basically almost the same profit. I just waited and sold it for a few dollars more. Actually happened with TNA with me. So that's my experience with that. Two scenarios that can happen. But let's say let's say I'm let's say it's November 12th, right? Like a day before, and you're sitting at like 90% profit, and you want to exit or you want to close the put. Let me show you guys how to do that. So you go back to the stock. Since I have one open, it's a great example. So to close a put, let's just say right now, I'm fine with 44%. I'm content, and I want to just take the $54 profit, and that's it, right? So how you would close it is you want to buy to close. Since you sold to open, right? You want to buy to close. So you enter one, and as you can see, the price is 0.68. You can enter 0.68 or 0.65, whatever you want. Review order, and then you're going to see the release collateral right there. So as you saw, the collateral on this one is $3,500. So I'll get that money back, and I'll get to profit the gains already made currently, right? So that's how you would get out of or actually close a put that you're selling. All right, so now you know how to sell a put and how to exit it early if you'd like. So, like I said, TNA is one of the stocks I use for selling puts. Another stock that I actually am currently selling a put for is Virgin Galactic. So Virgin Galactic is another company I would not mind holding 100 shares. Let's actually go to the stock. So if you look at the 1 year chart, even though it's been pretty up and down, I do think long term, and I'm talking like 6 months to a year, it does have potential growth, and it could shoot up as commercial space travel becomes more of a thing. So just me personally, I'm not recommending that you use the stock, but me personally, because I do actually want to own 100 shares of Virgin Galactic for long-term investing, I'm just gonna go ahead and sell a put. And if it drops below $18, like the one I have open, that's fine. I'll just hold on to it. So that's another one I currently have. But like I said, I usually use TNA, or if you have more funds, I actually had a TQQQ put. So TQQQ, let's actually go to it. I'll show you guys. So as you can see, this is $142, right? So last month I was actually selling a TQQQ put. Let's actually do the same thing so I can show you the difference in the collateral requirement. So let's do the same expiration we did for TNA. And let's go ahead, since it's at 142, let's say I want to get into it at 140. So you hit continue, enter one, and you see the premium is much higher, right? So you would essentially get $830. All right, so hit review and continue, and you guys will see what I'm talking about. So since I chose the 140 strike price, 140 times 100, I would need $14,000 to enter this trade, right? So it just depends on how much how much research you've done on the stock. and how confident you are in the trade. So you can do it for a few different stocks. Like I said, I do like TNA, I do like TQQQ. I like stable ETFs, and that's that's what I've been doing. All right, so that wraps it up. Hope this video helped everyone that is considering selling puts for some consistent profit. If you guys have any questions, please leave it in the comment section below. Also, don't forget to like the video, subscribe to the channel. Other than that, thanks for watching.